Okay, so I think the best rental market update we have is Zoopla's, the UK market update. This is according to Zoopla itself for June of 2024. Now, the executive summary says if you're a landlord or you're an investor, you probably want to tune into this one, regardless of where you are. It's not exclusive to Fife, really. It's right across the whole of the UK. And we're going to talk about according to Zoopla statistics just out last week. Okay, so executive summary according to Zoopla is the UK rental inflation slows to 6.6%, the lowest rate actually in 30 months in terms of rental inflation across the UK. London leads the slowdown with rents up only 3.7% over the last 12 months. Rental demand is down 25%, but still two times the pre-pandemic levels. Supply of homes for rent up 18%, but still a third below pre-pandemic level. Rents have actually fallen in some cities over the last quarter as market dynamics begin to soften. So there is headroom for rental growth in most affordable areas, and supply-demand imbalance will continue to narrow slowly. Zoopla then going to say finally that essential for political parties to put forward specific policies to grow the size of the private rented sector. Are you listening, political members or members of parliament or MSPs? What Zoopla has said, it's essential for a political parties to put forward specific policies to grow the size of the private rented sector and not curtail it. That is the main issues causing the problem right now with the private rented sector itself. The fact is, there is so much draconian legislation it's putting a lot of landlords off in Scotland, especially, and as a result, rents are rising because demand is still there and supply is dropping in the market. Zoopla then said, as I said, supply and demand imbalance is starting to narrow, easing the level of rental demand. Inflation is more at pre-pandemic levels. Okay, so here we go here. So this is the UK rental inflation. It's at the lowest for 30 months. So what does Zoopla have to say about this? Well, the annual rental inflation for new lets has slowed to 6.6% in April 2024, down from 10% a year ago. The average UK monthly rent is £1,226, up £80 over the last year. This is the lowest rate of annual rental inflation for the last 30 months, which is since October 2021. As demand weakens, often high base and affordability constraints drag on rental inflation. It's bound to be at some point in time that rental inflation will begin to curtail, just like house prices as well, because there becomes a finite limit where people actually say, I can't afford that anymore, so therefore I'm not going to take it. So that's where rental inflation starts to stabilize out. However, unemployment is up to 4.4% from 3.3 this morning, from 4.3 this morning, sorry. And the UK salary growth is still at 6% year on year. So that's outstripping inflation itself, which is still at 2.3%. Let's see what happens in the next week's base rate decision next Thursday with the Bank of England. Is it going to come down a quarter point? It's anybody's guess at this point in time. The underlying rate of inflation, let's look at this and let's look at a graph. I've always got a graph here to let you see what's going on in the marketplace itself. So there's the headline stats as we see. Here's the first graph that we've got here. As I've shown you before, supply demand imbalance starts to narrow. So rental demand is down 25% versus 2023. It's up 100% since pre-pandemic levels, so not double, as I'd said before. And the stock of homes for rent is up 18% as opposed to 2023, but it's down a third, 33% on pre-pandemic levels again, which is 2017 to 2019. Okay, so then we come in to talk about UK rental inflation lowest for 30 months. So the underlying rate of inflation, the increase in rents over the last 3 months, as shown on an annualized basis, is 3%. This is the lowest for the month of April since 2021 and points to a continued slowdown in the headline rate of inflation over the rest of 2024. As you can see here in this graph, so the purple line is the year on year in year compared to 2023. The light purple at the back of that, you can just see quite faintly, is a London rate of annual rent inflation at 3-month annualized. Okay, so what have we got to say about that then? Well, Zoopla goes on to say that demand has actually weakened off of the high base, but supply is actually low. The chronic imbalance between rental supply and demand is starting to narrow, but remains well out of kilter. Demand for rented homes is slowing off a very high base of one-off pandemic factors start to recede, and the mortgage rates actually fall below 5%. So mortgage rates are actually falling, but I think it's got a funny feeling that they're maybe pricing in the fact that base rates are about to fall next week, and that's maybe why mortgage rates are actually falling a bit. Rental demand is down 25% over the last year, but competition for for households remains high, with 15 households chasing every rental home, more than double the pre-pandemic average of the 6 people from 2017 to 2020. Average number of homes for rent per estate agent has increased by almost a fifth, 18% on this time last year, boosting choice for renters, hence the reason why you're seeing the rental inflation levelling off. However, the supply of homes for rent remains a third lower than the pre-pandemic period, as low investment in rented homes keeps the overall stock of private rented homes broadly flat. Now, that's mainly due to the fact that the draconian legislation and the thoughts of legislation in the English market are putting a lot of landlords off, or would-be investors off, from renting in the UK housing sector, for the private renting sector. Let's look at the national picture. Zoopla goes on to say the national picture of low rental demand and modest increase in supply is replicated all over the regions and the countries and the counties of the UK. Demand is down by up to 30% off across the east of England, followed by London, 28%, and southeast, 27%, Scotland, 27% as well. Available supply is up in most in London, and Scotland is up 24% year on year, as seasonal factors result in more homes for rent at the start of the upturn demand that runs between May and September each year. This happens every single year, by the way. So London actually leads this slowdown in rental inflation. And why is that? What's the reasoning behind that? Well, the headline rate of rental inflation has slowed modestly across the areas of Great Britain over the last year. London has led the slowdown, with average rents rising by just 3.7%. Down from the 13% this time last year. The average growth in rents across the rest of the UK outside London is currently 8%. The highest increase in rents are being recorded in North East, which is 9.5%, and Scotland, which is 9.3%. The highest rents in Scotland, 9.3% year on year, according to Zoopla. Now, why is that? It's rent regulation. It's causing that problem. It's the very fact that there's a restriction in supply in Scotland, because it's putting a lot of landlords off. Therefore, they're selling off. The demand is still there. There's lack of supply. So therefore, rents go up as a natural result of that. Okay, so Zoopla then goes on to say the underlying level of rental inflation, or the 3-month growth expressed on an annual basis, is lower than the annual rate of growth across all areas, pointing to a slowdown in momentum in rental growth. In the London, the average underlying rental rate of rental inflation is negative 1.3%, as above rents, the average rents, have fallen by 0.3% over the last 3 months. Here's the slowdown in rental inflation. I'll show you here in a graph form. So here we are here. If you look at that and drill in on this, you can see there rental inflation. See in London, the purple year on year. So it's gone up year on year, but the underlying rate of annual rental and rent inflation, 3-month annualized, is actually down in London. So you can see the light purple dot. But you can see where Scotland and the northeast of England are the highest levels, and that is ultimately driven by regulation. It's causing that problem because landlords are selling off. What happens to the rental market after that then? Well, regulation. Well, rental growth stalls across several cities. So what happens is rents have fallen over the last quarter across the smaller number of cities. This is down to rent levels for the new lets adjusting to localized changes in available supply and more price-sensitive areas. You could clearly see when you go to the cities and things like that, the rents are beyond £1,000 on average. Whereas you come to local villages and communities, for example, in Fife, and then you can get some rents at about £500 and £600, which is a totally different price point in comparison to having to live in a city. Seasonal factors also influence the quarter one of the quieter period before the usual seasonal upturn in rental demand between May and September. So this is quite obvious it's going to be upturn in rental demand, which is linked to the jobs market and the end and the start of the academic year. ZOOPLA's index shows average rents have fallen slightly over the last quarter. Nottingham fallen by 1.4%, Brighton 1.1%, York 0.4%, Glasgow 0.4%, Cambridge 0.3%, and London 0.3% as well. Zoopla then says in their data there are modest falls in the context of the recent rapid growth in rents, but it's clear evidence the rental market dynamics are starting to turn in some markets overall. Rents have continued to increase across the UK, according to Zoopla, over the last 3 months, where the affordability headroom for rents to rise. Rents in regional towns and cities such as Gloucester, Sunderland and Northumberland have risen by up to 3% over the last 3 months alone. Is this going to continue? Is growth in rents and average earnings narrowing? This is the question we've got to ask ourselves. So let me just talk about that and tell you what Zoopla says about this as well. Zoopla goes on to say that rents for new lets have been rising faster than average earnings over the last 2.5 years. Since October 2021, as rental inflation slows, the gap to earnings growth, currently at 6%, is starting to narrow. So this is starting to narrow in terms of the rental inflation, in terms of salary as well. They're starting to come into an equilibrium. So then Zoopla then goes on to say the growth and affordability of renting should start to act as a drag on rental inflation. This is normal practice, remember, for this to happen. However, the rent levels have been supported by continued strong demand and pressures and low levels of investment in the private rented sector housing. It's the low levels of rental investment in the private rented sector that's causing this problem as well. But again, as I say before, they're put off by the legislation or the impending legislation, possibly in England overall. The picture varies really across the whole country, and much depends on how affordable rents are relative to the earnings and the scale of the headroom for rents to rise further overall. At regional and county level, the proportion of gross earnings spent on rent is the highest for over a decade. The rapid rise in rents over the last 3 years has worsened rent affordability. However, there's a wide variation in how much the average earnings are spent on rent over the whole period of time. Not surprisingly, though, rents are currently rising faster in the northeast and Scotland, where rental costs account for the lowest proportion of gross earnings. In contrast, London has the highest rents, which account for the highest proportion of average earnings, and are now back at 2015 levels, having fallen over the pandemic period. So we can show you right here in a graph form as well. So as you'll see here, look, rents accounting for growth and the share of earnings. So and here we've got here, as you can see overall, it's now 21% of average earnings in Scotland. Again, Patrick Harvey, who put rent regulation in place, said, unaffordable rent levels is 25% or more of the average salary. Yet, Zoopla shows clearly here in Scotland, on average, the average earnings as opposed to the average rent is still 21% of the salary. So, which is well below what Patrick Harvey, the Minister for Tenants, argued about putting rent regulation in the first place. And yet, in Scotland, we're saying that rents are going up about 9%, but they're still well below in proportion to the average salary. So I can't then say again and again how wrong the current Scottish government got it when they put rent controls in place. They made it actually worse for tenants. That percentage of 21% average earnings would have been a lot less. And rental inflation would have been a lot less as well if rent regulation hadn't been put in place in the first place. And landlords continue to try and increase their rents because they're afraid at rent regulation it will continue, which has always been indicated it will, into the years to come. And at some point in time, they might end up putting a rent freeze back in. So hence the reason why a lot of private landlords are driven to increase their rents, even though they normally wouldn't do that for fear of rent freezes being brought back into place again by the impending government. That's what's driving the rental market, as opposed to as prices go up as a result of that. So there's a wide divergence of rental inflation across London, for example. There's a complex and highly segmental rental market, making the regional average potentially misleading overall. So rents are rising at the highest in inner London, if anybody's interested in the London market, and the strong corporate demand and sharing compared to the outer London area as well. Rental inflation has slowed the most in inner London, with the rents in Westminster and Tower Hamlets up by less than 2.5%. So where does this take us then for supply and demand imbalance? Are they likely to improve, or are they likely to not improve? So looking ahead, according to ZOOPLA, they do not believe that the imbalance between the rental supply and demand will improve materially over the next 12 months. Levels of new investment in the private renting sector actually continue to remain low, while demand is set to remain above average. This means that rents will continue to increase at a slowing rate, but they will continue to increase. So if you're renting right now, batten down the hatches, because it will still continue to go up. And it's driven by the regulation, or the possibility of regulation coming in with the English government as well. That's what's causing this problem. Zoopla going to say then that low new investment as private landlords keep selling is causing an issue here. They then say the stock of homes in the private renting sector across Great Britain has been broadly static since 2016 at 5.4 million. There hasn't been an exodus of landlords, but levels of new net investment have been very, very low, which has stalled any growth in supply to meet the higher demand in the private renting sector. 2016 tax changes rapidly slowed new investment in private rented sector from landlords. Section 24 came in as a result of that under the Tax Act, which minimised the deduction of mortgage interest to basically a tax credit than a tax at lower rate. It was basically a tax credit you're getting against it now with Section 24. And data on changes in the number of outstanding buy-to-let mortgages as shows rapid growth until 2016, followed by a much lower levels of new investment until 2022, when the stock of buy-to-let mortgages started to decline as interest rates started to increase. At the same time, there's been an increase in investment from corporate landlords, which has offset lower investment by private landlords. In other words, they're buying big, huge, astronomical units. They're building them to rent maybe 600 and 700 units at a time. Wait till a corporate landlord gets control of the market. Think about it. Will they actually take their time to think about whether they should be evicting you or not if you're not paying your rent? Will they actually let the government control them? I doubt it very much, because they'll have all the clout, and it'll be driven by the investment houses and the banks. That's the worst. The worst is yet to come if corporate landlords start to take over that market. But hey ho, that's the way it's been done. So here it is in graphical form. As we can see, 2014, the stock of buy-to-let loans starts to decline as mortgage rates rise. So see, there's the buy-to-let loans, annual charge, and change in here. So it was at 100%, and then it goes right along. It's still up there, starting to drop in 2017, and then in 2024, the higher mortgage rates results in fewer buy-to-let loans overall. You can see it dropping dramatically in 2024, the stock of buy-to-let loans in their decline. That's a strong indication that a lot of landlords are actually not considering investing in the market anymore. Zoopla's data actually supports this by saying that selling shows a continued steady flow of homes for sale on Zoopla that were actually previously rented. This averages around 31,000 a quarter, a level that has remained broadly constant for the last 4 years. 2/5 of these homes stay in the rental market, with just over a half returning to home ownership. And that's good. You can drive people into home ownership, But where are the people going to stay that want to continue to rent if there's no stock? Because the government's not building them. Well, current trends are expected to continue, with low new investment by private landlords, meaning stock of rented homes will remain broadly unchanged overall, and corporate landlords will continue to invest, but it will take some years for the group to grow ownership levels enough to impact on supply at a macro level. So rental demand continues to show little signs of moderating. And basically what Zoopla is saying is their indicators and their numbers are indicating clearly that the demand drivers for rented housing shows little sign of moderating significantly in the near term. The labour market is the primary driver alongside the demand for student homes and the relative easing becoming of first-time buyer affordability. Additional pressures come from a lack of affordable homes for households in acute housing need. The labour market has softened in recent months, but a reduction in economic activity rates as by British workers means that their continued reliance on immigration to fill the gaps in the jobs market. The number of overseas students studying at British universities also expanded, adding to rental demand across most UK cities. Three quarters of first-time buyers, by the way, comes from the private rented sector. Higher mortgage rates since 2022 has made it harder for first-time buyers to have a home, but this has kept households in the rented sector, and they were a fifth fewer purchases by first-time buyers in 2023. The decline in the mortgage rates over 2024 is leading to a recovery in the first-time buyers, but there's a continued demand for rented homes and would-be buyers waiting for mortgages rates to fall further. ZOOPLA actually expects demand for rented homes to continue to moderate slowly as one-off pandemic factors recede, but the higher cost of home ownership and the lack of affordability of homes means that rented sector will continue to see continued demand on multiple fronts overall. So what is the outlook for the rented sector and the private rented sector housing and the politics as well? Well, ZOOPLA actually say the market is still on track for a continued slowdown in rental inflation to 5% over 2024. Uh, Inflation sitting at 2.3, so 5% is still a good return in terms of rental values. Um, Recent levels of rental growth have been unsustainable, meaning a slowdown is inevitable, but this is being driven by more changes in demand than an expansion in supply. On the policy front, while rental reform bill failed to make it onto the statute books in England, we can clearly see that the rent controls will probably make it on the statute books quite comfortably in Scotland, and it has been for some time, but there's new legislation impending and coming in. This seems like that will put a lot of people off investing in the private renting sector overall. ZOOPLA actually say, while changing the protections for existing renters is important, the greatest imperative is to boost the stock of homes for rent, both private and affordable, through greater housing delivery. Something which the government can't do at this point in time because they simply do not have the number of people and the skills and resources to do that and build more homes. That's what Brexit caused. While there has been more political focus on the challenges facing the private renting sector, true progress will only be demonstrated by political parties setting out specific plans and goals for the future in the private renting sector manifestos. I think we can clearly see it in the last couple of days. Even the Liberal Democrats are not going to continue to take the pressure off of private landlords in the private rented sector and regulate it, which, in my opinion, is almost toxic to the point it'll make it even worse, not for landlords but for tenants. A healthy private rented sector is vital for economic growth and a more balanced housing market overall, and that's what they don't seem to realise. Let's look at average rents across the whole of the UK, and just to finalise and wrap this up, I'll let you see the graph here. So if we zoom in right across the market itself, we can see in Scotland, the average rent in Scotland is 797, according to Zoopla's number. Now, a lot of people list on Zoopla, so they've got all the real-time data. So they're saying that the average rent in Scotland is 797. So where is the Scottish government getting the over £1,000 from? This is what Zoopla's saying, and this is the current, and they list all the properties. So is the Scottish government out of touch with their data? And then they're manipulating the data to make it look like what they want it to look like to justify their purposes of rent control overall. As I said, Zoopla says that according to the average rent that they've calculated, compared to the average salary, it's only 21% of the average salary in Scotland. Uh, 25% and above is apparently economic unaffordability for renting. So this is 21% according to ZOOPLA. So it still makes it extremely affordable for somebody to rent. And you can see across the rest of the country as well, we've got Northeast 704. You go down to London, you're sitting at 1,000. Southeast England 1,300. Southwest 1,072. London's 2,122. East of England 1,773. So you can see how it's still in some places right across the whole of Britain very affordable unless you get to London. But London, remember, is a higher price point in terms of what it costs to work and live in London. Let's just zoom in on the numbers up the side and see the average rents for the areas. Look, average rent per calendar month in Newcastle, Edinburgh, 1,268 in Edinburgh. Glasgow, 949. Aberdeen. And then we've got as well, we've been zooming on the numbers overall in here, East Midlands, London, year-on-year change, as opposed to 2024 and 2023. You can see there, and we go through, we've got Edinburgh, as opposed to 2023, it's, we can see there, it's the 3-year average, and here for Edinburgh is 9.5, which broadly reflects what it is in Scotland. Sorry, it's 11.6, which really doesn't reflect what's in Scotland. It's actually gone up quite considerably since then. So you can see there overall, while rental inflation is a bit more subdued than it was this time last year, it is here to stay, broadly about 6 to 9% overall in the Scotland area and across Britain itself until the end of 2024. And due to lack of supply and still that demand there, even though it's because it's still double pre-pandemic demand in terms of rented homes, then the future for the private rented sector for landlords and investors is probably pretty good. For tenants, it's demand. There's so much demand for so little supply. So tenants are going to still continue to struggle to get the right properties because there's not enough supply in the marketplace. And how that's going to be resolved is entirely down to the government and the powers that be. Until next time, guys, I'd be interested to hear your opinion on this as well. Till next time, I'm Jim Parker for Fife Properties TV. Bye-bye for now.